Investing can be daunting, but if you're looking to grow your wealth and achieve financial security, it's a smart move. Here are 5 reasons why investing is worth your time and attention. It has the potential to grow your wealth. Investing can be a great way to grow your money over time. The stock market, for example, has historically increased at an average annual rate of 10%, and it doesn't always go up in a straight line either. If you have $5,000 invested in the market and leave it there for 30 years with that average gain each year, then by the end of those 30 years, you'll have about $36,000. While investing is not guaranteed to generate profits, you might lose some or all of your original investment. If done correctly and over long periods of time, it has the potential to grow your wealth and help you build financial stability for the future. You can invest in different types of assets. Investing is the process of buying and selling financial assets. You can invest in different types of assets, including stocks, bonds, and mutual funds. You can even invest in your own home. There are many ways to get started with investing. You don't need to invest large sums. In fact, it's possible to start with as little as $50. And while there are many reasons why saving less money at the beginning might seem like a disadvantage, the most obvious being that it makes your eventual retirement savings seem further away, there are also plenty of benefits that come from starting small. You will have time on your side. The longer you can put off cashing in, the more money you will make in interest over time. It's easier for beginners to stick with their plan if they aren't already stressing about losing everything they've invested yet. Market fluctuations are eliminated for you. It's important to understand that investing is a long-term commitment, not a get-rich-quick scheme. The key is knowing that your investments will be safe if you make smart decisions and don't panic in the face of market fluctuations. Investing in a diversified portfolio means that any individual stock can go up or down, but your overall portfolio should remain stable. This stability comes from spreading your money across multiple investments as well as different companies and industries. It also helps protect you from risk because there are always other companies where you can invest your money if one company does poorly or if it goes bankrupt. By diversifying, you eliminate some of these risks because if one company fails or does poorly, another may do very well instead. And remember, diversification doesn't mean putting all of your eggs into one basket. It simply means spreading out your holdings so they aren't overly susceptible to failure by any single business venture, like Apple Computer. There is no special investment knowledge required. You can invest with a fund manager or in a diversified portfolio, and you don't need to spend hours researching companies and markets. You can invest in different types of assets, such as shares, bonds, and property, which will help provide you with a more balanced portfolio. Investing is a great way for you to grow your money. It doesn't take a lot of time, and there are many different ways to do it. You don't need any special skills or knowledge, just some patience. The best part about investing is that when done right, it can enable you to live comfortably in retirement without having to work anymore. That's why we recommend starting now while it's still possible.